Let's continue with the theme of Africa Day celebrations. Well, the Continental Free Trade Area is a trade agreement to form the world's largest free trade area by creating a single market for goods and services for the almost 1.3 billion people across 55 countries here on the continent. It is one of the 13 flagship projects of Agenda 2063, the Africa we want of the African Union. Well, as we observe Africa Day today, we look at the opportunities that the pact brings and indeed the associated risks created by the continent's poor infrastructure. We speak now to a senior economist at the Export Credit Insurance Corporation, Sindiso Ndlovu, speaks to us now. Sindiso, good morning to you and thank you for your time. Let's start with what it is that the Export Credit Insurance Corporation does exactly.
Good morning, Polly. The ECIC is a state-owned company, and our mandate is to ensure export transactions as well as investment that South Africans make across the continent. So in a nutshell, that is what the Export Credit Insurance Corporation does. So in our portfolio, we obviously look at various projects on the continent, and we offer political as well as commercial risk insurance just to assure investors as well as exporters from South Africa that are expanding into the continent. So we are there to give that added assurance that the continent is open for business and that with our support as well as our cover, they can go and venture into these markets that are offered by the African Continental Free Trade Area.
So let's talk about those opportunities that are being created by the Africa or African Continental Free Trade Area. What projects are currently being pursued?
Thank you. Just in terms of, if we start from obviously looking at trade within the region, if we compare Africa to the rest of the world, there is still very low levels of trade within the continent. So as cited, some of, the reasons for this low trade, if we compare ourselves to Europe, that is above 68%, as well as Asia, that is in the region of 58%. We have an issue of tariff as well as non-tariff barriers. So obviously for a continent to trade freely, we need a lot of hard as well as soft infrastructure that is there. I think key on the continent is obviously the time in terms of, if you look at the number of days that our trucks spend on the road to actually move goods from one country to the other, especially for countries that are landlocked. So the projects and the opportunities that are obviously there, we have, as the ECIC, we have covered the Bait Bridge refurbishment post. That is one of the busiest ports in Africa that actually operates throughout the day. It does not close. So the kind of projects that we look at is obviously port developments. We also look at road infrastructure that is there, because without the hard infrastructure to support, projects, then moving goods across the continent still becomes a challenge. So some of the projects that we support, particularly on the African Continental Free Trade Area, have to do with movement of goods across the continent. And we, in our portfolio, as well as the inquiries that we have a whole suite, because remember, when we talk trade, we're also talking industrialization. So we're also supporting some electricity projects on the continent, because we have to look at this as a holistic solution. You can't just move goods to market, you also have to manufacture. So that whole suite of projects, right through from electricity projects to road infrastructure to port infrastructure in development, is some of the projects as the ECIC that we typically cover.
Yeah. Let's talk about the risks. You've already spoken about the barriers to trade, whether it be the tariffs or indeed infrastructure that is not conducive for the movement of goods. The risks now associated with making sure that trade between the African countries does develop with speed. What are some of the risks associated there?
I think we must acknowledge that we are still in a continent that still has regions of, conflict, regions of instability. So high level, we obviously have, I think, war and civil disturbances being some of those risks that we cover as the ECIC. Even within countries, there are still some pockets of instability that some countries continue to experience, which makes, it affects the whole business environment in that particular country. And then as well as the issue of currency volatility, on the continent, we still see a lot of the currencies actually having a lot of volatility where there is no stability in the exchange rate. So those are the major risks that we actually consider to be very prevalent on the continent.
Yeah. Talking about stability, or perhaps should we say instability, there are these warnings that the cost of living crisis, basically the expensive goods, whether you talk basic foodstuffs, is what is going to propel instability in many countries, not just on the continent, but abroad. How big a risk is that, particularly this year and perhaps the next coming 2 years?
I think we must acknowledge that with what has transpired, a lot of the countries have seen the value of actually bringing global chains, regionally. That way, we kind of mitigate some of these pass-through costs that come as a result. For example, if fertilizer is imported and the prices are a bit high, then if we have, regional value chains where we can get supplies of fertilizer, then it filters through into agriculture, then that way we're also dealing with low cost of production without ignoring, obviously, effects of climate change that also feed through into agricultural production. And we must remember, on the continent, the bulk of the population actually, is highly dependent on agriculture, and there is a lot of a lot of countries actually that import, where the food basket actually is a big component of the imports that they have.
Yeah.
So I think looking obviously at ways to bring some of those value chains, some of the effects obviously we cannot solve all the problems at once. But if we apply an approach where, we look at grassroots in terms of how the sector can be supported, as well as climate-proofing agricultural issues, so that, production can obviously be boosted and we can mitigate some of those. The risk will continue, obviously, because we cannot solve some of these problems. But I think the whole issue is obviously, dialoguing. I mean, there are some things that governments can do. In some countries, there are subsidies, but in light of some of the issues that are also there on the continent, even those subsidies are coming at big cost to the government that are facing multiple challenges. So I think the issue is obviously maybe trying to address some of these problems at grassroots level, where we try and see how agricultural production can be improved so that we reduce obviously the import basket, and with the food component, becoming smaller.
Yeah.
That will also, I think, be an enabler for some of the countries and deal with the issue of the rising cost of food prices.
Sindiso Ndlovu, thank you very much for your time and insight here. She is a senior economist at the Export Credit Insurance Corporation.